Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hello everyone, Adam Bergman here, tax attorney, founder of IRA Financial, and welcome to another episode of ADMAIL. On today's episode, three superb questions. One involving, can your son-in-law earn a commission on a self-directed IRA real estate deal? What about doing a Roth conversion in a solo 401k? What kind of IRA supporting would you have? And then thirdly, having a situation where you want to use potentially the ROBs to fund a business, but you have employees. What can you do? Is it a problem? Is it not? Is it an option? So buckle up, and I promise I will go in detail through all of the aforementioned questions, and you're going to learn everything you need to know about those questions. So buckle up. Without further ado, let's get started. First question is from Jamie C. of Santa Clara, California. Jamie wants to know, hi, my son-in-law is a real estate agent. Can he earn commission if I sell my condo in my self-directed IRA? So unfortunately, Jamie, you can't. That's just a quick answer. 4975C and E2 discuss what a disqualified person is. So essentially, when you want to invest with your IRA, there's only three things you can't do. That's it. Can't buy life insurance or collectibles like art. And thirdly, the broadest category is found on Internal Revenue Code section 4975C, which just says your IRA can't directly or indirectly transact with a disqualified person and benefit that disqualified person. 100% of the benefit must be derived by the IRA. That's it. So a disqualified person is the IRA owner, their lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such a person. So unfortunately, your son-in-law cannot get a commission from the real estate deal. However, maybe his buddy, colleague in his real estate firm wants to take on the job, and maybe they could flip him some work down the road on another deal and kind of help each other out. That's one way of doing it. So thank you for that question, Jamie. It's a good question, but it's a quick answer. Second question from Carly R., San Antonio, Texas. Carly wants to know, I did a Roth conversion of my solo 401k plan in 2023. What reporting do I need to do? So Carly, if you are a client of IRA Financial, which I hope you are, we'll take care of it for you. We will file a 1099-R, which is due end of March 31, 2024 for the 23 year. That is a form that will disclose to the IRS the value, the amount of your conversion, so that when you file your tax return in 2024 for the 23 year, the IRS can match up to 1099-R with the income you've reported from that conversion on your tax return. So it's kind of a check and balance the IRS uses. Generally, you get a copy of that January 31, but the most important part is that the 1099-R must be submitted to the IRS March 31. If you're a client of IRA Financial and you're part of our annual consultant service, which pretty much should be, if you aren't, I'd say 99% of our clients are. Why? You get updated plan docs, IRS opinion letter, change the law, you get access to all our tax consulting. We do the 1099s, 5500s. If you have UBIT, the 990Ts. And if you are investing in LLCs, there potentially could be a BOI FinCEN requirement. We'll help you with that as well. So you get a lot of value, and it's basically a requirement, because if you don't, unfortunately, we're no longer the plan document sponsor. And if there's changes in law, new documents, you don't get them, your plan's not in good standing, and God forbid you get audited, your plan doesn't exist. It's invalid, and everything in it is taxable. So you don't want to go there. Our annual fee is like $399. It's a business deduction. It's not huge. And if there are issues financially, business tough, going through some issues, like talk to us. We'll work something out with you. Don't worry. The most important thing is we just want to have the relationship with you so we could help you out. So Carly, give us a call. You probably should have, if you haven't, it's common. information where you can go in our app and just complete information so we can file the 1099-R. for you. Third and final question is from YouTube. And this individual wants to know, I have watched all your videos on the Roth solution. I have a business which is set up as a C Corp with 8 employees. Would I really have to give my employees the right to buy stock in the business? So I gather you have watched my videos because you understand that the way the Roths work, rollover business startup, is it takes advantage of an exception in the tax code under 4975 D13 that allows a 401k to buy corporate stock, which is known as qualifying employer securities. That's how you get out of the 4975C prohibited transactions. That's why the Roths will let you use your retirement fund to invest in a business you control more than 50%. Remember my first question from Jamie, who talked about disqualified persons. The reason the Roths gets around the prohibited transaction rules is because 4975 D13, if you satisfy a D as in David exception, you're no longer in the 4975C world. So thus the transaction would not be prohibited. So you need to allow the shareholders of the corporation, if they have access to a 401k, if you are offering one plan participant, i.e. you, to buy stock in the company, technically you should allow all eligible plan participants. So generally you would do that. What we do is generally provide you language that you can send to your employees, basically saying, hey, this plan offers the right to purchase qualified employer securities. If you're interested, let us know. Most employees either don't have enough money in the 401k or just not interested to do that. If there is a situation, that's something we'll discuss with you and how to address it. But generally, if you're allowing yourself as a 401k plan participant to buy the corporate stock using a 401k plan, you're going to have to allow all eligible participants too. Now, assuming these employees are eligible, there could be an eligibility requirement, let's say of a year, where if they're not with you for a year or since the plan has been started and they're not with you for a year, you technically don't have to offer them the plan benefits. So it all depends on the plan docs. If you're a client of ours, we'll help you design the plan and strategize so you can maximize the Roth solution, for you and your business. So it's a really good question. You need the C Corp. So the fact that you have a C Corp is great. The fact that you have 8 employees, not really a big issue. There's still a workaround, depending on really what you want to do. And a lot of this is, I hate saying this, but it's true. A lot of it is just facts and circumstances. So it's not just a one size fits all type solution. It really depends on your business structure, your retirement goals, what you need, and maybe the Roths isn't what you need. Maybe there's other options that we can discuss with you that may work better and involve less friction with your employees. So that's it for today. I hope you guys enjoyed today's podcast. Thank you, Jamie. Thank you, Carly. Thank you, individual YouTube. If you guys do have questions, you can leave them in the comment section, or you can email us at info@IRA Financial. Say Adam or ask Adam or ADMAIL. It'll get to me, and we'll put your question in the queue, and I promise we'll get to it. May take a couple of weeks or months, depending on how many questions we go through. But generally, I work with my producer Barry. We go through things and kind of pick the questions that seem to fit the timing, the episode. I sometimes go with just things I've been hearing during the week. I do get a chance to talk to a bunch of folks in my team, outside the business, just people contacting me. So if I feel like there's something interesting, topical, or just like one of these random weeks where a lot of these questions are popping up, I'll dump them on the show. But otherwise, I kind of just take the cue and just go through questions. So it's a lot of fun. I love doing this podcast. I hope you guys enjoy it. And if you don't mind giving the podcast a thumbs up, a good review, a rating, that's always helpful just to boost the podcast. Just do it. If you don't do it for yourself, don't do it for me. Do it for other folks, because the higher the podcast gets rated, assuming you enjoyed it, the more people will get to listen to it and find it, and we all can learn from each other. And I put this education, this content out there just because it's super frustrating that there's such little education on retirement accounts, self-directed retirement accounts specifically. I give this example all the time. I went to obviously university. I went to law school. I have a master's in tax law. I worked for 8 years for the largest law firms in the world. And I never knew about self-directed accounts. I never even knew you can do alternative assets in your IRA, let alone all those other amazing tax strategies when you include the ability to do Roth IRAs, 401ks, even Robs. There's so many amazing tax solutions out there that you could benefit from. So the more we can learn from each other and share education or content, the bigger the community gets and the more people could win, because it's not a zero-sum game. It's not like, oh, only 20% of the American population can win. No, we all can win. You just got to start early, be consistent, trust the process. The retirement system is rigged in our favor. Why? It's based off simple mathematics, compounded returns. You save in a retirement account, your money will go faster than a taxable account. You start early, just stay consistent, good habit forming, and trust the process, be patient. You will have significant tax-free wealth. It's just guaranteed. So that's it. Hope you guys enjoyed today's podcast. Have a great rest of your day. And I hope to see everyone again next week. Take care.